Welcome to Crossroads. It's said that when something's going to collapse, well, it's slow at first and then all at once. And we may now be watching the start of a new economic crisis, as the markets are now hit with the largest decline since the Black Monday crash back in 1987. Now, look, back then, the Dow Jones Industrial Average, the Dow, dropped 508 points, or about 22.61%, and it wiped out around $500 billion in market value. Well, look, the new crash, which just started this week, saw the Dow drop by over 1,000 points, or about 2.6% by Monday afternoon. The worst performance in a day in nearly 2 years. Now, look, of course, the situation is still developing, but given other global trends, there's the possibility this could signal more of what is to come, especially as we're actually watching similar signs take place in the Chinese market. And here's why. The recent crash was caused by bad job numbers going public, but recent data show the Chinese Communist Party has been also covering up the real state of its markets. The economic trend we're now watching could soon get much more serious. Now look, we've been talking for a while about how troubled economies, especially with issues right here in the United States and China, are going to impact things. The reality is, right, because of the way the modern global market works, if the economy gets hit in one of the major economic players, the US, China, or other major areas, it tends to have a domino effect elsewhere. You know, you might remember they were saying before that if China sneezes, the world catches a cold. And it's for this reason that, during COVID, even when other countries were opening up, global shipping was still stuck because of the ongoing lockdowns in China. Well, now on the economic front, it seems that the dam may finally be starting to burst. And right now, we're watching it with the US market. But what's key here is that the causes of this are not just limited to the US market. Now, to start, let's have a look at what took place with the crash on Monday. CNBC said that fears of a U.S. recession were the main culprit for the global market meltdown after Friday's disappointing July jobs report. It said investors are also concerned that the Federal Reserve is behind in cutting interest rates to bolster an economic slowdown, with the central bank choosing instead to keep rates at the highest in 2 decades last week. It notes that investors are continuing to sell off mega cap tech stocks, and the once hot artificial intelligence trade and tech shares were among the worst performers Monday. Further in, it states that other global markets were also severely affected. Now look, on the note of what started this whole sell-off, of what's happening right now, it's mostly being pinned on the recent reporting of rising unemployment in the United States. The Epoch Times said a disappointing U.S. jobs report on August 2nd threw fuel on the global stock market sell-off as weak employment data heightened investor fears of an economic slowdown and sent investors running for safety. It says the stock rout came as the Bureau of Labor Statistics said Friday that the U.S. economy added 114,000 new jobs in July, a market slowdown from June's 179,000 and well below economists' expectations of 175,000. It also says Friday's data showed the unemployment rate jumping from 4.1% to 4.3% in July, raising to its highest level since October 2021 and further signaling deceleration in the labor market. It says the figures followed a closely watched report from the Institute of Supply Management on Thursday that showed U.S. manufacturing activity shrank in July by the most in 8 months, sinking deeper into contraction territory. Now look, there have been a lot of debates around the actual job numbers in the U.S. And many people have pointed out that, frankly, even what we're being shown on the surface may not totally be representative of the actual job market. A lot of people pointed out notably that the growth in jobs, a lot of it is like part-time jobs. Also, there's the issue of mass illegal immigration, government jobs, which are a little different, of course, than manufacturing or normal jobs, and also looking into how that ties into job numbers. Then there's also the big kind of elephant in the room that, look, basically, if you're out of work for too long, they eventually stop counting you in the unemployed statistic. Now, of course, unemployment affects people's buying power, And you can expect to see people spending less money when they're struggling to get by. Obviously, if you have less money, you're probably going to spend less money. And so that has a direct effect on the markets as well. Lower employment, lower spending, fewer products being sold, and that means companies also have less cash. But it seems that the recent sell-off probably has even more to do with interest rates. And, when or if the Fed is going to start cutting interest rates. Because remember, before all of this, they were saying we're going to be in a stagflation, right? They were talking about stagflation. And the reason the Fed is raising interest rates like this is to try to fight off against that, right? They're trying to not go into recession, and they're trying to not have inflation. And so we're in this weird middle area, and that's what you're watching. But many have noted as well that actually globally, the economies are not doing so well almost anywhere. And that's also the reality of the current market. With all this in mind, though, I'd personally say we could be watching the beginning of a global trend. The other side of this goes back to China. Because remember right now, what you're watching is basically investors pulling their money out because they're anticipating a crash. Now, first of all, with the whole trade war going on, you can expect most big companies to start reporting some lower numbers. For a lot of them, right? They're losing access to one of the world's largest markets, China. Now, on that note, what has happened? Imagine you're a major corporation, one of the biggest markets is China, and then the Chinese Communist Party changes its laws and works on, domestic production and stuff. They want domestic products, not foreign products. They, in their own words, they want to get rid of every single US-based technology platform. They want to have all the software, Chinese-made software, all the technology, Chinese-made technology. What do you think is going to happen to the US companies? All the companies that operate there currently, they're what China would call sparring partners. And the implication of that is this: they're training with you so they can beat you. They're not having you there so you can be there forever. They're learning from you until they no longer need you. Now, also with this, part of it has to do with sanctions and tariffs. Of course, the US and Europe and other countries, they're putting sanctions, tariffs, and other forms of, kind of trade punishments on China. Some of that's to prevent, dumping of products on their markets. Some of it's to prevent, for example, subsidized products, and things subsidized by the government, going onto their markets and undercutting their own businesses. And the other side of it has to do with things like, of course, China's support of Russia and other issues like that. Now, those are very likely going to expand in the next few weeks. In fact, they're saying maybe 2 weeks or so, they're going to have the plan for it, and then we're going to hear about it. Meaning, the current economic state within China is going to take a hit very soon as those get rolled out. And take that in context of the CCP, of course, actually doing more incursions into U.S. air defense space, the Chinese Communist Party doubling down in its support of Russia in the war, the Chinese Communist Party trying to undermine the U.S. peace deal with Ukraine and the rest of the world while creating its own alternative world order peace deal, and of course the CCP backing Iran and backing Hamas in the wars currently taking place with Israel. Take that in consideration of how the United States might take that into consideration on their side when it comes to how much they want to punish or make it so that the CCP's businesses are no longer able to support those types of operations. That is going to be in the next few weeks. But on the other side of it, again, the Chinese Communist Party's economic plan, they're about domestic production. The entire focus is to, get foreign investors, of course, but they don't want foreign business. They want every single thing to be a Chinese business, Chinese technology, Chinese software, Chinese everything in China. The whole CCP economic plan that they just rolled out is 100% made in China, and they will push out foreign companies as soon as they have something to replace them. They've also created a new stigma, notably backed by Chinese law, against flaunting wealth, which is, of course, impacting a lot of luxury brands. You're already seeing the effects on a lot of Western Europe, for example, where companies that used to have big markets in China, whether it's alcohol or bags or clothes, Suddenly people aren't buying them. They're getting pushed out. Then there's the chip war, which is likely going to expand, and that of course impacts the entire high-tech market. There's also the CCP's new espionage laws, which make it risky for companies to do business in China at all. And there's the other side about how all these tie into, global economic problems, again going back to China. I'll be talking more about this after we come back from a quick break.
Experts agree. One of the best ways to protect against financial uncertainty is to diversify your portfolio. Learn how physical gold and silver can secure your retirement funds from today's economic challenges with a gold IRA from American Hartford Gold. You can safeguard your wealth with no penalties or taxes when you transfer your current qualifying retirement accounts. Call now and our precious metals specialists will send you a free information kit, no cost or obligation. American Hartford Gold, a trusted industry leader with an A+ from the Better Business Bureau, has a 5-star rating from thousands of happy clients. Whether you are getting physical precious metals in a gold IRA or delivered to your doorstep, we offer only the highest quality gold and silver. For your peace of mind, we also offer a no-fee buyback commitment, a low-price guarantee, along with free shipping and free insurance. So don't wait. Call the number on your screen today and secure your financial future.
Welcome back. The U.S. stock market took the biggest hit in about 2 years on Monday. And joining, of course, a global stock meltdown caused by growing fears that the U.S. economy may be spiraling into recession as well as bad job numbers are reported. Now, of course, the situation is still developing. We don't know how bad it's going to get or whether it's going to recover pretty quickly. But there's the possibility this could signal more of what's to come. Because really what's behind this? Well, technically it wasn't the job numbers. It was the Fed not changing the interest rates, not rolling them back, in anticipation that there's going to be some kind of economic crisis. This is investors, again, believing that we may be entering an economic crisis. This is especially as we're watching similar warning signs take place in the Chinese market, but with the added layer of the Chinese Communist Party covering up bad economic data and, the real state of its job market. This cover-up, this economic censorship by the CCP, that could also kick off a type of global economic problem. And why is that? Well, look, companies are losing access to the Chinese market as the CCP is enacting a new economic plan about domestic production. They are pushing out foreign companies. Now, imagine if you're a company and maybe 20, 30, maybe even more % of your income is based on having access to the Chinese market. What happens to a company when suddenly 20% of their market disappears? What happens to a company when one of the most populous countries in the world pushes them out? What happens to the markets when that happens to many, many companies? Well, that is going to be something that has a domino effect all through Europe and all through the United States. And of course, that again is part of the CCP's current economic policy to push out foreign companies because they're focused on domestic production. But I want to point something else out, which I haven't seen noted as strong at other places. Part of the big sell-off we're watching right now in the markets is because, again, of U.S. unemployment and the ripple effect that will have on consumer spending, and also how that will factor in with the Fed possibly cutting interest rates. Well, what's not being discussed is that we're actually watching similar trends take place in China. Almost the exact same thing, just more severe. The Chinese Communist Party, though, is not including this information in terms of its, regular doctored numbers, at least not yet. They're just saying, hey, 5% economic growth, 5%. The evidence does not support the data. In fact, a lot of people have noted this. Now, here's where it gets complicated. Now, look, if you go by the surface numbers in China, the CCP keeps saying again, economic growth is around 5%. And again, that's if you go by state media. CGTN, they just reported, quote, half of China's provincial level regions post GDP growth rates above 5% in H1 2024. Now, what does that actually say? Well, this is reporting from the provincial level governments of the CCP. And the big question here is this: would they dare report anything else? And no, they wouldn't. Because in China, it's the same problem they had during their other big populist movements. When they had, for example, the Great Leap Forward and other things like this, where they were trying to make everybody into farmers. What happened? Well, every single region was expected to outperform in terms of, crops and grain and so on. What happened in reality is they had massive crop failures and people were starving to death. But the local provincial governments were saying, hey, record crop production, more than we've ever had. You won't even believe how many crops we're growing. And the CCP claps its hands and says, good job, comrade, keep it up, while people are dying because they're misreporting the numbers in order to feed the CCP's narrative, which is used to fuel, of course, its global image and prop that up for the whole world to watch. It seems like it's the same thing here based on every single indicator. Then look, although there are plenty of economists outside of China that note the CCP's numbers are almost definitely not real, a lot of news outlets are still using the surface claim numbers to form their entire narrative on the state of the Chinese economy. They base their analysis off of that, even though on the side, governments and really respected economists, they're noting the numbers are almost impossible. There's almost without a doubt nowhere even close to what they're saying. But again, in the reporting and the analysis, and including what businesses are looking at, they're still going by the numbers, even though they understand they're probably not real. Now, look, part of this may be because if you're operating in China, if you're a journalist in China and you're working on this stuff, they will arrest you if you question those numbers. There is red lines that you cannot cross if you're going to be operating there. And so if you're working in the Truman Show, basically, living in China as a journalist and you're from the West, you have to play the game. This includes recent revisions, notably to state secret laws and espionage laws, because the new laws they just changed, in addition to what was already extremely restrictive policies around how you report things, they also have new vague protections around reporting on the Chinese economy, and notably any issue that affects state interests. They can arrest you and call you a spy if you damage state interests. And remember, with the recent top-level meetings of the Chinese Communist Party, the Chinese economy right now is one of the top state interests. They just had the third plenum and a top-level meeting of the Politburo. That, for them, is one of the biggest issues. Nobody dares to touch it. Nobody dares question 5% growth. Nobody dares to say otherwise. Nobody dares to leak data because the CCP has changed its laws so they can throw you in prison if you do. But look, we can also look at some other indicators to get an idea of what's really happening. First off, look, there's a possibility we're not seeing the effects as strong on the Chinese markets, at least not yet, because the CCP started restricting this just a few weeks ago. Bloomberg said on July 10th, quote, China took some of its most extreme steps yet to restrict short selling and quantitative trading strategies, seeking to support the nation's sliding stock market as a closely watched economic policy meeting approaches. The China Securities Regulatory Commission approved an increase in margin requirements for short selling starting July 22nd, making the trades more expensive for hedge funds and other investors. Meanwhile, they say, China Securities Finance Corp., the country's biggest stock lending provider, will suspend its business of lending securities to brokerages starting July 11th. The measures announced late Wednesday after the benchmark CSI 300 index dropped for the sixth time in 7 sessions, send a clear signal that authorities want to stem a slump that erased about $1 trillion of onshore market value since mid-May. And while that's providing a knee-jerk boost to sentiment, they say, Chinese stock gained on Thursday. The limited role of short sellers in China suggests any long-term impact may be limited. So, in other words, the Chinese markets were not doing well. Month after month after month, they were not doing well. They were crashing. So what happened? The Chinese Communist Party started restricting the ability of people to sell, at least when it comes to short selling and other methods. And given that, of course, well, look at what just happened in the markets. You had globally a market crash. In China, it did not crash as hard. Why did it not crash as hard? Well, it's maybe because they can't do it. But then the CCP did something else that was pretty strange. Right after they put restrictions on the market in place, they then created a new policy to stop publishing some data on the stock market. I'll be talking more about what the CCP is doing to its economy and how that will impact global economies. Now, that's going to be only on EpicTV.com, the uncensored streaming platform of the Epic Times. So if you're watching on YouTube, Facebook, X, Rumble, there's a link in the description below. Click on that. You could access the rest of this episode, as well as our library of shows and our hard-hitting documentaries and issues that really matter, like the Chinese Communist Party's 100-year plan to defeat the United States. The CCP is one of the biggest threats to America. They're using things like propaganda, video games, entertainment, movies, culture to subvert and influence the next generation. And this unrestricted war against our country is one of the scariest but least understood issues of our time because it's not tangible. It's all being done through soft power means and ideological subversion. Now, I spent over a decade investigating the CCP's subversion, and it's such an important issue that I made a documentary called The Final War, which exposes this 100-year plot of the CCP to take down America. So if you'd like to find out more about what exactly the CCP is plotting against America, then watch The Final War. You can find the link in the description below, and I'll show you all a trailer before we go exclusively to EpicTV.com for the rest of this episode. I'll see you there.
The greatest threat facing the United States is the CCP.
The Epic Times investigation team had studied the CCP for years, but what we uncovered was yielding evidence beyond our imagination.
With Chairman Mao, with the Prime Minister, our talks have been characterized by frankness.
The Clinton administration said, oh, don't worry about it. This will be a poison pill for China.
China's strategic goal is to make sure that the U.S. has 4 enemies, and one of them must be a terrorist group.
We are giving of our life's blood so that the Chinese Communist Party can survive and thrive.